get your king.
My DMs, my messages, my email, you guys kind of went crazy over this. So let's kind of go through these steps, right? Number one, I said is don't change your jobs and become self-employed or quit your job. Look, the reason why I'm telling you guys is that we need a 2-year work history when you're trying to get approved for a loan. So if you're a W-2 employee and you change your job and you go be self-employed and you don't have a 2-year documented history on your tax returns of showing self-employed income, then you just started your clock all over. Most people don't understand this. So even if you go from being an employee to self-employed, but you're in the same line of business. So a perfect example, if you go from being a truck driver for UPS and now you want to run your own trucking company and you have no history in your tax returns for self-employed trucking company, then guess what? You just started your clock over. So rule number one is when you're trying to get approved for a loan, don't make any major changes with your employment. And it goes the opposite. If you're self-employed and now you want to be a W-2 employee, it's the same thing. If you don't have a history, documented history for the last 2 years of showing W-2 income, then you started your clock over, all right? So that was rule number one. Rule number two, and I got a lot of comments about this one, right? Don't spend the money you save for your down payment. I don't even know why people are even asking me about that, first and foremost, right? This is pretty self-explanatory. If you have money saved for your down payment and closing costs, don't use that money and go buy a Mercedes-Benz. Don't use that money to go buy your furniture. Don't touch that money. Leave it in your account. Don't bother it. Try not to move it around. Just leave it in your account. This is not rocket science. I don't understand why some people didn't really understand that and were making comments about that. But guys, if you have money set aside for a purchase, just leave it because it's there for that reason, the purchase. All right. Rule number three, don't make any large deposits into your bank account. Now, this was a big topic in my DM over on Instagram, right? This is self-explanatory. If you make large deposits and let's just say you put 10,000 cash, 5,000 cash in your account and we cannot document where that money came from, then no bank is going to use undocumented or unsourced or unverified funds for your transaction. So if you work in a cash related business and if you can't show a history of you consistently depositing this cash because it's from your business, then we can't use it. If you saving mattress money on the side for the purchase, then you need to make sure that money is sitting in your account at least 2 months prior to you going out and signing a contract, because when we look at your bank statements, we're looking at the previous 2 months. So that money needs to sit in your account sourced and seasoned. All right. Now, if you're in contract and you know you got 50K or 20K in your mattress, but you know you're counting on that to use it for the transaction, then guess what? That money, we cannot use it unless you can document and show proof where that money came from. All right. So here's number 4. Don't use your credit cards and let your payments fall behind. Again, I don't understand why people are questioning this one. This is pretty self-explanatory too. If you care about your credit, why would you let your payments fall behind? That I don't understand. Now, when I say don't use your credit cards, I'm not saying if you're using cards like your American Express or something like that, you use it for gas, groceries, your everyday life, but you're paying it off regular, then great, that's cool. But most people, well, I'm not gonna say most, I'm not gonna categorize everybody, but some people have the tendency of maxing up their credit cards and not paying it down, and they're maxing it out. So once you start maxing out your credit cards, that actually lowers your credit scores because your utilization rate is high. All right, so that's what I meant by rule number 4. Don't use your credit cards or let your payments fall behind. All right, because again, using your credit cards could be good and bad, just depending on your personal situation. Rule number 5, the most important: don't buy any autos, any boats, any furniture, or any major appliances before you buy your house. This happens all the time, unfortunately. People get excited, they're about to buy this home, they want to celebrate with new furniture or buy the car that they always wanted because they think they're about to close. Slow down, wait a second, and wait until you actually close before you actually go out and buy these items, because now if you take out monthly payments on this, that's going to get incorporated into your debt to income ratio. And trust me, I have seen this blow up deals right before closing because people went out and bought a new Mercedes Benz or a new Range Rover because they think they're closing in a week. But again, the bank has the right to review your file, do a credit refresh right before closing to make sure you didn't take out any new debt prior to closing. A lot of banks do this, so be careful with that. Rule number 6, don't originate any new inquiries on your credit report. Now, when you have inquiries, someone's reviewing your credit, and 9 times out of 10, it's going to be a hard pull. So that means it can lower your credit score. Now, if you're shopping for a mortgage, there's things out there that says 2 weeks, 3 weeks, 4 weeks, right? That the credit bureaus won't penalize you because they know people shop for a mortgage. That is true. So what I like to tell everybody is typically 3 weeks. So if you're going to shop for a mortgage, try to have your credit pull with all the lenders you want to get a quote from within that 3 week time frame, because that way your credit scores won't be impacted. But after that time, it can be impacted. So don't originate any new credit inquiries while you're in that home buying process, because it could drop your score and that could affect the interest rate. All right. Number 7, don't change bank accounts or transfer funds between accounts without checking with me first or any of your loan officers. That's 100% correct. I can't tell you how many times people close out accounts, move money to this account. That's just a paper trail, right? Remember, in banking, especially with conventional FHA, VA type of financing, we need to document all the money. So if you're moving one account from one bank to another and you transfer them here, you're just creating more paperwork for yourself. And people sometimes get upset, like, wait a minute, it's coming from this account. No, I don't. We see account numbers, but we don't know that's your account or not. So we have to show that proof. So the best thing to always do is the same thing like I told you guys with saving the money. Just keep the money still. Don't touch it, don't move it, leave it alone. Number 8, don't co-sign for a loan or lease for anyone. Everyone's dead. If somebody call you for the college loan, co-sign, forget about it. Someone wants you to co-sign for that auto loan, forget about it. While you are looking to buy a home, you do not need to co-sign for nobody, because although they are signing as the main borrower, you are still legal to pay that debt. So guess what? Now you have to incorporate that into your debt to income ratio. Now there are ways around it. Now, if you have a car loan or something like that someone is paying for in their own account, and we can document with 12 months of their bank statements that you have nothing to do with you're not on that account, and we can show that they've been making that payment on time, then we can omit that from your liabilities. But the safest bet, if you know you're going to purchase a home, don't co-sign for anyone. Don't put no new debt on your credit report. Number 9, don't make any significant purchases until after closing. That falls back to the other number. I forget what number was that. Let's go back to that. That was number 6. So number 9 and number 5 should have been number 1 to me. It's kind of a biggie verse. Some of y'all too young for that. But number 9, don't make any significant purchases. Guys, stop buying shit. This is very simple. If you're trying to buy a house, buy the house first, then buy the shit. All right? Because that stuff is not going anywhere. All right? So if you want to make your home buying experience as flawless as possible, follow these 9 steps that I just broke down to you guys. All right? And if you follow these steps, this will make your process a little bit easier to get approved for a mortgage. Now, there are still other factors to get you approved for a mortgage. You need to review your income, your credit scores, the financials, to make sure your debt to income and everything works for the property that you're looking to purchase. But this is just a little bit of MG home buying tips to help you guys out in the future. All right, so thank you guys for tuning into this video. My name is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. And leave your comments below, man. If I miss any steps or tips that you guys think that I need to put in this video, leave them in the comments below, and I'll make sure I'll make a part 2 if you guys can come up with some more tips, and I'll elaborate on that. All right, peace.
It's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jury cell. Wealth building equity in real estate.